So finally, that day is here. Bitcoin halving is now live. It's done. What can you see in the price action since this halving? Or at least, what should you be expecting? To put that in the picture, you may have to look at the current halving, the last halving, and all the other halvings which you can learn from in the price action, whether it's 2012, 16, 20, or right now. What can we see here? Looking at the macro as well as the micro is important at the spot where we are right now. There's a lot of difference from which we should be learning, especially when you do look at XRP, whether it's on a daily chart and the range which has acted as a support over last 1 year, or you look at a 3-day chart and the current price action, if that's you in the market, then you have signals in the market. Whether you look on a weekly, you have another message from the land of candlesticks. And that's why we say you need to look through the macro, the micro, and then decide, especially when gold shows you this. And on the other end, NASDAQ looks like this. So you need to understand between the narratives in the market and look for what exactly is happening. So the price action is showing you a lot of different things, and we would like to see what the hell really is happening. Because now this is done, the reward structure is different. And we understand that people buying this amount of Bitcoin from this day onwards means more demand with half supply. New supply at least. But what would that mean for the entire new ecosystem here? Whether that's the distributed ledger, the blockchain, the payments, the investors, what should we look forward to? Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. When we are looking at the price action, see, we are looking at most likely the dollar. So the dollar is showing us on a shorter horizon, it's starting to form a trend. Yes, we need to see that on the macro as well. But on the other end, if you're pricing that against XRP, which is XRP to dollar, this is that range which we are looking at, right? You're watching there has been a resistance, there has been a support, and that's valid from a long range. You're watching this standing by over and over and over again, which is good. Now, one of the concern would be we're back down to almost close to the bottom support of this trend line. We had a rising trend line from here with a higher momentum. We lost that level as a support with this recent choppiness. It was looking good for sure when we were above that. But right now we came back down to the bottom trend line. What does that mean for us? So one, you're looking at reduced momentum as of now. You don't have too much of a price action. Say you zoom in, you look at it, and it's not just XRP. Most of the crypto assets are in the same territory after the recent downturn. And especially for XRP, if you do look at this, that was like a 32% drop. That kind of chopped out a lot of different retailers because we were not expecting such a huge crash. If you take it from the recent local top, that's a 40% drop without much of a pump. Last time when we got this, it was like, you got a bit of a rally with that news. Right now, it's not. But let me actually take you to the macro chart here. Because when you actually look at the Bitcoin and its halving, what if you actually look through the same time horizon for XRP as well? Say 2016 halving or 2020 halving. It's almost close to that range if you do put this, right? Yeah, we're here, we can see what's happening right now, but this was that range. It didn't have much of a respectful movement for that halving. Here we are, we didn't have much of that respectable movement for that halving. The price is still there. So just because of the halving, the price may not drop to the downside or just pop through the roof. So we kind of get to understand that very easy. And that's altcoin market. But yes, in general, it depends on what Bitcoin does to the sentiment of the market. One of the easy questions which you should be asking to yourself is this. Okay, we have seen all these halving cycles. Perfect. What do you notice when you do connect all the bottoms? Are you close to the bottom or are you close to the top? Because there is something which you should be looking at. If you do put that respected movement into the market, trying to connect all the tops so that you can see what the price action is doing, you kind of get to see somewhat like this, where you would be a little bit confused, like, okay, what the hell is the price action trying to illustrate here, right? This is where you are. So you may not actually have sky high upside from here, but still you're getting close to the top. We should agree on that front, even if we don't agree on the bottom. But when we come on to this, you also have to think about it. Each and every halving, Bitcoin has been massively down from the all-time highs. This was 84% down. This one was 64% down from the all-time highs at the time of the halving. Then next time, you were 52%. And right now, you are at the all-time highs. Think about that for a moment. So right now, there is a deviation from the history. You are not here, you're not here, you're here at the all-time highs. And one of the primary reasons for that is the governments are printing one way or the other. They're still not slowing down the printer, which kind of dilutes the value of the currency, which kind of pushes up the prices of these assets. Whether they produce something or not, it's a different story. The asset itself is getting increased value. Now, let's look at the price action here for Bitcoin on a 3-day chart. Just like we've been looking at XRP and understanding like, okay, what we can see, we should also be looking at the Bitcoin side. Say we got one candle to the downside, breaking below the moving average. Now, if you do look at that range, say we don't want to miss that trend line here, right? If we put that a little bit more accurately, it would look something like this. We then jump onto a daily chart and we are looking at this. So we broke to the downside, we are retesting. A rejection won't be a good option. It would create another level of panic. Now that's a micro view for sure. But the moment you actually go on back to the 3-day chart and ask the question, okay, we literally had this candle open on 18th. So it's been just like, 24 hours. We still have another 48 hours for this candle close. Agreed. But right now, what can you learn? We have 70% of the buying volume, but not that price and candle. That's not that bullish in the first 24 hours. Fine. Now we go on the daily chart of this asset. One of the primary reasons is that this support level has been strong for all of these shops, which is good, which is actually good. But what concerns me is the price action which we are watching right now in front of us here in this particular daily close. We got the daily close and that volume was one of the highest daily buying volume since this range. And here you actually got a bullish engulfing candle which showed you we are reversing back up, but lesser than that selling volume here in the buying side. You got a bullish engulfing candle. Here with a lot of those buying volume, you did not get that. So it should be argued that the buyers are weak or the sellers are super strong. Whatever those who are buying up, they are buying 1,000. The other guys are selling 1,001. That's the stage now. Yes, they're not selling 2,000. So the price is not dropping like nuts. But it is still showing you they are not strong enough. One. Now we go to a shorter horizon. Say you go to a 4-hour chart. One of the price structure which we been forming here is lower highs, lower highs, lower highs. It changed with the most recent price action. So you were also following the lower lows, and even till this point, lower low, which signaled you that the lower low is now not much lower than the last one. So the momentum to the downside has reduced because we reached a support. Agreed. Now, on a pattern side of things, if you're analyzing based on patterns, this kind of shows you a possible move coming up here. Maybe we are going to do this kind of a choppy move before we move on. So that would form this kind of an inverse head and shoulder before we go back up, which is fine for me. The way we are doing all these things, if that happens, I'm happy. Because the altcoin market would also get some leverage from it. So now we look at the dominance. We're here, we got a lot of sellers. They didn't have that impact on the price. We now have equal to last or just above that and buying, and the price is already erasing the selling. So buyers are still strong, or more money is moving into Bitcoin. I mean, there is no argument, right? As of now, you can actually see that's the reality. This is big. Now, I'm not saying this is going to be accurate, but I'm saying this is valid. That's truth. Right? So when these guys are buying, their horizon is longer. Most of the smart money, big money involved is looking at that. Now, there would be a lot of different takes on what you would see with this. Whether it's USDC, whether it's USDT, people would actually argue different things. But let me ask you one thing. Say you operate USDC. And say, for example, your assets are backed 1:1, whether with USD Treasury, US Treasury, or anything. And when you have a reserve of $1 billion and someone is going to buy 1.2 billion, now you have to mint that for sure. So the demand for the USDC is coming in. And yes, you have to back it up with that buying power which is coming in to a US Treasury, commercial note, whatever you are doing. But that means new money is coming into the ecosystem which demands to produce more of that stable coin. Whether that's USDC, whether that's USDT, I don't care. That's the real story. Yes, on the other end, if they really don't manage the reserves, that's a concern. That means they're giving you $1 million worth of stable coin to buy assets worth of $1 million. And they're collecting that $1 million from you. Fine. But if they are not keeping it there as a 1:1 reserve, that's a trouble, which literally is the reserve banking system which we live in. Say here in Canada, they have zero reserves. In India, what's that? 5%, 4.5%, something. So it's not a big amount of reserves. So if you do look at with the current standards, that's okay. These guys mostly have 25, 30, 50, 100% holdings. USDC says they have 1:1, which is 100% reserves. So even if people are doubting USDT, they may have 50% reserves. The banks have zero, which is better. So it's us who need to understand the reality and decide. So now that kind of a FUD should be ignored in the market, and that's the only reason why I gave you my thought process there. Maybe I'm wrong, but my opinion is clearly that. Now, to the NASDAQ, I know people are shouting crazy, like we're dying, the market is about to blow to the downside, blah, 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 blah. But if you do look at this, what do you understand? The 1, the 2, the 3. Fine. Usually you come back down to this range. I'm happy to see such a ABC corrective leg to the downside before you start going back up. Because remember, when we had the thought process of this guy is going to go back up with a cup and handle here, not a lot of people were agreeing on it. We wanted to see a huge recession, but this was it. We did not go lower than that. This was it. Whether you used it or not, it was it. Great. Now here we are coming back down to a trend line, and people are shouting all over the world that we are due for a recession. But let me ask you something. when the money printer has already gone like crazy and the price action is still here, it's already down. I mean, the real inflation would be what? 10, 15, 20%? So that's already down 10, 15, 20% because it didn't go up like nuts. If you do understand that. So it doesn't have to drop 50, 60% to match up because they just diluted the currency which you're talking about. So it's all, even if it drops 15%, it's already like it dropped 50%. If you get the point which I'm trying to illustrate. Now you look at the gold side of things. Yeah, last time you entered the overbought territory on a weekly, you went up 46%. Right now you're at that sweet spot where the MACD, the RSI, the price is all showing you something similar. There can be short-term corrections, and I would like to see this happening because these kind of structure is where crypto assets do well. That means I would like to see that happening here. Gold consolidating before it goes back up like crazy, and crypto market does well during that time. So when you do take profits, you have another scope. You understand, okay, gold is going to go for another ride. I can use the newly found purchasing power into this market, which may not be like, the crazy gains which you see in crypto market, but it can still be great. Now, on a shorter horizon, if you are looking at the market, last 4 candles here has been slow. They don't have the momentum. Till this point, the momentum was to the downside, right? Easy way to note this is just count the candles. I mean, let's look at how many buys, how many sells. So you're watching like 1, 2, 3, 4 sales, which actually pushed the price this much down. Then you barely got 2 buys. So it was sell, then couple of buy, then huge sell, then a little bit more sell, then buy. So buyers tried to dominate sellers, but they failed. Sellers came back and they didn't have that amount of momentum like here, but they still won the game. Buyers came in, they couldn't hold on. So if you look at that structure here, now it's changing. The number of buys are increasing. The number of sells are reducing. If you don't understand that, fine, forget that. Just look at the length of the direction. To the downside, heavy momentum. To the upside, none. To the downside, heavy momentum. To the upside, okay, decent, but not like the downside. Then again, to the downside, heavy. To the upside, light. Here, things changed. To the upside, it went back up. Then, here, the upside was bigger. It erased the previous range here. Now, when you come back down, maybe I'm wrong, but I think we'll actually see this kind of a move, which is good. So on a micro level, what you're watching is that the ABC, this would have its own wave structure. This would have its own wave structure here, right? So the corrective movement to the action would be like this. Whether you're looking at the 1, 2, 3, 4, 5 or not, you will see similar micro structures involved. Don't get confused. Keep this simple. Just imagine this is a rounded bottom formation coming up with this as a previous level of support turning into a resistance. So if you do see this level breaking, which is 65,600, then your measured move in Bitcoin is going to be somewhat close to 9%, say 8% to be on the safe side. So if you do plot that in the price action, you're watching for a price close to 70,000, 71,000 range, which actually is a decent range based on what we have seen. So you dropped from this level, you made this as a support. If you reach here and get rejected, not good, not good, not good. Yeah, clearly making lower highs, lower swing highs and going back down. But if you do put barely a new high, I'm happy. Whether that's a fake out, I don't care. Because then we may come a little bit back down and then go back up without much of a delay. And that would accelerate the movements in the market. So when you do look at the altcoin side of things, say this is a 3-day chart, right? You're watching this. We don't have a candle close yet, but we are watching something. You have more buying volume here. We still have another 48 hours to go. So if the buying volume surpasses these levels and the price can come back up to retest this range, that's significantly bullish. But if not, it's bad, right? So the momentum kind of shifted. It's kind of slowing down. All agreed. But the support from where you're bouncing is more important. When you're at this range and you're trying to bounce off, all these 254 days of price action matters. Usually, when you do see the touch and run pattern, if you have a trend line, you go do things like this and there is a pop. And then, yeah, you come back down and you come back down, you go down. Now, we don't know how high that touch and run is going to be because say you take the example from the recent history. You have one here where we showed the similar thing. I mean, the price showed the similar thing and then it went up, boom. Now, when you extend this trend line, what you do see is this. To come back down, it took so long and then downside. But if you bought in here, you're still way above where you bought. Now, that's a macro picture. This is like a short-term picture. But both the ideas agree with each other. Like the price was still staying upside. The dominance, divergence, everything was showing you the same side. So understand that the macro, the short term, the medium term, everything looks okay. At this point, you're not looking for the market to drop another 50%. So guys, if you receive value for your time here in the Scientific Investor family, smash that like button if you haven't done that already. And if you would like to get all the updates in the SI family, use the link in the description below to join the SI family with thousands of members are readily taking benefit of what the market is doing. Right now, we're going through the Ask for TA session where we are posting all the crypto assets which you ask, which is like hundreds of assets. We are trying to cover at least 10, 15 a day. So in next 10 days, we cover almost every crypto assets of interest. In a way, you know whether that's above the support, whether that's below a major support. That matters a lot. If that asset is below, if you're a long-term guy, then it's an accumulation range which you like. You want to buy in there. You're a net buyer. You have next 3 years, 5 years, great. But if not, then you want something which is above the accumulation range. You're in one asset which is still in accumulation and you're watching like, you're interested in another asset which is now in the markup phase, which is above accumulation and coming back to retest down 30-40%. Maybe you may have to think about taking 10-20% from the one in the accumulation and putting into the other one which is riding well. If your horizon is shorter, if that's longer, it's different. Your maximum ROI is from accumulation. But if your time, that window is small, think properly. And that's where the one-on-one sessions, where I go through your portfolio, I give you my opinion for each and every asset, I think matters a lot, which gives 100x value than what you can see in the thought process of the charts. Because once the experience comes into the picture, they serve some value. That's what I believe. So if you want to get involved in, join the SI family, use this market cycle in your favor. I'll meet you guys on the next video. Bye for now.